Hi, I'm David Witter, founder and CEO of Financial Harvest Wealth Advisors. And today, what seems to be a hot topic is what do we need to do about this Greece crisis that's going on with the European Central Bank? The first thing I thought was interesting is I went back in our video archives and I found where I did a video in September 2011 about austerity. And even in that time period, roughly 4 years ago, Greece was in the crosshairs of the big concern of economic downfall due to default. So let's look at this a little bit closer and see how should we be approaching this. The first is if Greece does default, this is nothing new. In fact, the first time Greece defaulted on a sovereign debt would have been almost 2,400 years ago in the 4th century BC. Secondly, since the modern era when they gained their independence in 1829, Greece has been in default more than they've been current with their sovereign debt. So nothing new here. Second is, okay, if we expect them or we anticipate they might go into default, is that a big deal? Should I be concerned? One way to think about that is that Greece's economy or economic output is about equal to that of Louisiana, the state of Louisiana. So ask yourself, if Louisiana, the state of Louisiana, had a substantial pullback in its economic activity, would that affect the U.S. economy substantially and then the world economy substantially? And the answer is no. It may have a small impact, but very minimal at best. A second way you can think about this is Greece represents about 2% of economic output of the entire European Union, and it only represents about 0.3% of economic output for the entire globe. So we're visual to what does 0.3% look like. Here we can see this little mouse compared to this ginormous sumo wrestler. So I thought this is very appropriate because the little white mouse running around might scare the sumo wrestler, but the reality is the sumo wrestler's physical size is magnitudes larger than the white mouse here. That's the same thing with what's going on with Greece. No need for concern, but the little white mouse or Greece running around causing all this hysteria because of the media, but the reality is it will have little to any impact on economic growth and economic output, and also on equities and on the stock market. So what does this all mean to you as an investor? 3 things to focus on. Number 1 is by the ECB, the European Central Bank, taking a stance and pushing forth fiscal responsibility is actually a positive in the long run because it avoids future defaults from other countries and it avoids stagnation. Secondly is high quality fixed income, meaning AA, AAA rated bonds, not only in the US, but even internationally, we'll actually see, I would speculate, an uptick here because anytime there's disturbance or turbulence going on, there's a flight to quality. So you might see an uptick in that high quality fixed income, which is what we use typically in our investor portfolios. And last but not least is anytime there is fiscal responsibility and stability in terms of having a strong economic household and having your household finances in order, that's always a positive for equities in the long run because that's smaller government, more in the private sector, and more fiscal responsibility. So hopefully that's helpful for you. Our promise to you is guiding families toward prosperity, and prosperity is freedom to live a good life, peace, and wisdom. And hopefully this short narrative on Greece helped you with all 3 of those.